Woolworths said it expected earnings per share and headline earnings per share for the 26 weeks to December 25 to rise between 30 and 35%. The markets took a liking to the food and fashion retailers' upbeat 11.4% increase in group sales for the first 26 weeks of 2012. Sales in comparable stores grew 7.7%. Now, Paul, before we dig into the Woolworths trading update, let's just get an outlook for retailers. We saw the retail number out today, 5.6%, falling short of market's expectations of 7.1%. Give us your sense for the outlook for retail.
Okay, so those are kind of nationwide South African economy year-on-year comparative stats. Look, it is an interesting situation we find ourselves in because many people expected the retailers to do quite poorly because we know we've still got somewhat subpar economic growth in the country and a lot of anxiety about poverty levels and about, you know, the global crisis and the double dip and all of that kind of stuff. And yet the numbers were pretty good. Not huge, you know, not enormous. And we know that credit extension numbers in the economy as reported by the banks are not on fire like they were in 2005, 2006. And yet our retailers appear to have been able to do very well. So it's a little bit of an anomaly. And we know that the expectations are quite high, but somehow they continue to be either met or exceeded.
Well, let's come to Woolworths now, and unlike Truworths and Foschini, which we'll touch on later, they have quite a unique positioning in the sense that they combine food retailing with their clothing. And clothing sales were up 11.2%, food sales were up 11.7%, and this improvement in operating profit has mainly been because of the food business. Is it safe to say that because food is generally defensive, it helps to reduce the business's cyclicality? And from a competition point of view, are we going to be seeing more coming out of Spanish Zara in terms of clothing? And could we start seeing Woolworths going the route of a supermarket group and focusing purely on food?
Sure, look, that's a conversation that the group has been having for many years because the food side of things used to be quite flat, you know, in the old days, and I'm talking about like the 1980s and 1990s. Woolworths was better known for its clothing, which had a kind of mid-market position with the Princess brand for ladies and so on. People, you know, much older than you will remember this. Then the food really came to the fore because they were probably the first mover in terms of that organic, high-end food chain stuff where they were really very detailed with regard to the preservation of the cold chain and so on and so forth. So they were definitely a premium food retailer, and that did very badly in times of economic retrenchment where people would trade down to cheaper retail stores for their food, and has done very well in periods where there's been a boom because people, you know, it's an aspirational sort of food buying destination. So I think they've got quite an interesting brand. They've done a lot of work on the clothing side of things, and I think that offering has improved because it was perceived as being a bit dead in the water 3 or 4 years ago. Not that there isn't lots of competition in both parts of those businesses, but for the moment anyway, Woolies has been the star, and in recent years it's performed very well after a dire retrenchment share price-wise in 08-09. So they've done very well. The question is, can they continue to meet and beat those expectations? Because clearly they're a big operator now. But I think we're going to be asking the same question with regard to the other 3 stocks we can talk about tonight. All of them are doing well. All of them are highly regarded. All of them have performed well. All of them have quite big expectations baked into the share price in respect to forward earnings. And the question really is, as an investor now, if you're entering the market for the first time, which of them are going to really be the winners in the next 3 to 4 years, as opposed to, you know, which of them are winning now, because clearly they're all winning now.
Well, let's get a sense on that share price and come to Moxima at the technical wall now. They started trading at around 10 Rand in October 2008, and we've seen a massive rally in that Woolworths share price trading at all-time highs. Do you see this bullish trend likely to continue?
Bit of a concern is it's like trading on the 3rd tier of this bull trend, which is the steeper uptrend from its original bull trend, which is a bit concerning. I mean, it did bridge its all-time high at 41.40, and its RSI did bridge its resistance trend line and is slightly overbought. But this is not really convincing. Once it's on the 3rd tier, you should know that's a bit of a warning signal. And if it falls anything below 37.50, then we could see it at least complete 100% retracement from the start of that tier 29. So we need to just keep a close eye on it. I wouldn't really be very excited at it surging as much as it's surging now.
Let's just take a look at that relative strength index that you've got under the Woolworths share price. Tell us briefly what it is we're looking at, because you're mentioning it being in overbought territory. What are the warning signs there?
Okay, if we just have to on the definition of RSI, it's just a very simple oscillator which trades within two bands. The norm would be between 80 and 20, and it just gives you an indication whether the stock or the index is overbought or oversold. In this case, if it's overbought, which is above 80, would mean the stock is expensive and it could now reverse. And if it's in oversold territory, which is below 20, that then gives you that signal that it's cheap and it's probably a good time to jump onto the bandwagon. But in this case, it's overbought, meaning it's expensive, and that's already is giving us a warning signal that topside we're seeing now could come to an end pretty soon.
I'll come to a bit later and ask about the pullbacks. Let's just come back to Paul now. We saw that the debtors book reflected year-on-year growth of 6.7%, and no doubt that was because of the sale of the majority stake to ABSA. Can we attribute the marginal increase in the impairment rate from 1.6 to 1.7% to the fact that ABSA is now running that book?
Yeah, maybe. I mean, I know people from ABSA were crowing about that as well. You know, all of these retailers have had experiments with credit in the business. Some of them have had it for a long time and have developed their own internal mechanisms for making sure that they only advance credit to those that are, you know, appropriate risks. Woolworths went the route of the partnership with ABSA and has kind of exited it to some extent. But it's difficult to measure and have a comment about the quality of the book in good times. It's really more appropriate to look at these things when they're taking a punch in the face, because that's really when you see who's doing it well and who's not, and in particular who's following things up. But again, from Woolworths' point of view, I'm more positive about the company based on the fact that they don't have that additional financial type risk internal to the business. For myself, I prefer those that are in fact not actively involved with the credit extension side of things, because it adds another level of cyclicality to the business. So I'm quite comfortable about Woolies. I quite like the way they're positioned. I think that niche, and I particularly think the higher end food is a good place to be. I guess one of the questions though is how far or otherwise are they advanced in terms of their Africa strategy. They haven't really done much in the way of food outside of South Africa's border. It's mostly been in the clothing side of things, because I think they find the fulfillment easier.
Well, just staying with food, there is now this major allegation out with Frankie's in terms of, you know, copying the product, copying the flavors, even the names. How do you feel about the allegations that have been made, especially given the fact that Woolworths is this huge retailer up against, you know, small Frankie's?
Yeah, they're a 35 billion market cap company, and Frankie's is a tiny player. Look, I don't think that was positive for them at all, reputationally. But at the same time, it hasn't really had a major comment out of the radio chat show environment. Certainly the market doesn't seem to be taking it all that seriously. And I would imagine from Woolies' point of view, they'll probably address it with some kind of, you know, joint venture with the Frankie's people in order to, you know, paper over the cracks.
Well, obviously the Advertising Standards Authority is the one who will give the final judgment, but let's get your vote now for Woolworths. It sounds like you're leaning towards hot, Paul.
Yeah, like I said earlier, they're all hot. The question is, which is the hottest of the lot, and which of them really justifies its forward numbers? I prefer Massmart in this space. I mean, that stock price is very, very hot, but it has that kind of Walmart premium. I think Woolies is hot. It would probably be one of those that I'd look most closely at once I've got my fill of the one I mentioned earlier.
Woolies is hot for Paul. Moxima, you obviously expressed some concern around the bullish trend not being sustainable. What's the likelihood of seeing a pullback, and tell us whether you think it's hot or not?
I would put it as lukewarm. This third tier is a bit concerning. It is ringing a few alarm bells. And like I said, if it at least breaks out of that tier, we could see a bit of a pullback back to 29. There's a couple of at least support trend lines that it has to bridge to get there, and if it really retaliates or rather surrenders to those support trend lines, we could see it fall to 29. But that wouldn't be a gloom and doom, because it would just merely be a pullback within the major bull trend, so the bull trend would still be intact, which in the long run makes it a hot stock, but in the short to medium term, you'd want to be a bit cautious.
That's why you're saying lukewarm for Woolies. Thanks, Moxima. Let's move on now. In a trading update, Truworths said that it expects first half headline earnings per share to rise by as much as 15%. Group sales in the 26 weeks to end December increased by 10.7% to 4.8 billion rand. Moxima, let's start with you this time. And judging by that RSI, it looks like the Truworths share is in a bit of a consolidation phase.
A bit in no man's land. The anticipation is it will probably start trading sideways within those converging trend lines, which would then translate to the price chart also moving sideways. A bit concerned that it's failing to trade above 82, 85. since October, and it's formed a bit of like falling tops. Key support is still at 73 Rand. What we see for the short to medium term is that consolidation pattern at least persisting. The only second concern is that usually when there is a top consolidation within the top side of the bull trend, that's the first phase of a topping out pattern. So if it really gives in at 73, that increases the probability of it going to 66.10, and below that, this entire bull trend is under threat.
I see you've got another support line just below that 66.10.
Yes, that's at 59.30. That is another key support. I think that would really stamp the approval that this is going to fall further. We really see that sideways trending. I don't think it would give in as soon, but within that sideways trending, you probably just want to be more cautious and not really enter in any position if you're not in it, that is.
Paul, let's come to the trading update now. Group sales up 10%, but in the previous period there, group sales up 20%. So it looks like the Christmas period didn't do as much for Truworths as it did for the other retailers. Should we be concerned at the slowing of growth in sales?
Look, this again is a company that's done spectacularly well in recent years. Cape Town based, was one of the earliest to extend its shop footprint, professionalize its stock handling and buying. Very good in the credit environment, to talk about what you said earlier. In other words, people with Truworths cards, they manage that book very well. They stay in touch with their clients and so on, manage it all internally. The share price is pretty pricey. People talk in the analysts' consensus forecast for earnings out to like 2014 is for, earnings per share of around 6 to 7 Rand. So at around, 80 Rands a share, it's perhaps not terribly expensive. But to get there from where they are now is still going to take some quite good work. Whether they do well or not depends on whether they can sustain their good management practices and whether they can do the buying right. So, whenever I pass by their stores in the mall, there don't seem to be that many people in there, but then again, the numbers look quite good. So I'm a bit mystified, but then I'm a man and I'm, not right in the target market with regard to the shopping. So I suppose I should ask you whether you think, based on their goods, whether they are in the hot spot or not.
Well, I'm not really a fan of Truworths clothing, Mr. Theron, but I'd like to just carry on with the whole credit picture. The credit growth has been pretty static. We see them coming in at 73% versus 70% in the previous period. I'm just concerned that this is all unsecured lending, and we're seeing the likes of Capitec, Able, even FNB wanting to play quite aggressively in that space. Could this become an issue for Truworths going forward?
I guess so, because at the end of the day you've got to be price competitive, because people aren't going to shop using an in-store card if they perceive that to be a more expensive option than to obtain credit from FNB or from African Bank or one of the other players in that market. So you're only as good as your last reporting period. There's a lot of positive sentiment. This is a company that's performed so well off a relatively low base in the last decade that it's become accustomed to its high rating. And as we saw with Clicks, which we're not talking about tonight, but which fell quite severely when they had results which were perceived to be slightly less than stellar. Companies like this are always at risk that if they're priced for perfection and they don't deliver it, that there could be some shareholder disappointment.
Now, I know you said that this is a hot stock, but doesn't the inflation picture concern you? They come in with product inflation of 8%, and traditionally inflation is something that's positive for retailers because they can just pass on the price increases to their customers. Could we start seeing this inflation figure starting to hurt Truworths?
I don't know. I generally think the whole sector is going to continue to do very well, because we know that a lot of what has happened in the South African middle income market has been based on growth in public sector wage remuneration, the relatively positive circumstances with regard to credit extension, and then the emerging middle classes that are in this country, shoppers from elsewhere in Africa coming here, these guys expanding their business model into sub-Saharan Africa generally. So there's certainly the basic fundamentals for good growth. So I don't think any of them are going to do badly. Like I said before, it's really just a question of deciding in a very favorably disposed sector which of them is going to do the best or not. So these sort of short-term things about what's
product inflation.
There's some of them will do well, some of them won't do so well, but generally I think they'll all do fine. I'm waffling a bit, but I think they could continue to do well. Why not? Let's
come to Moxima now and get your sense, hot or not, for Truworths. I know you're mentioning the consolidation, but how do you feel about the share price going forward?
On the side of more lukewarm towards cold. This consolidation pattern is kind of giving us a signal that there is a spat between buyers and sellers. There's a lot of indecision regarding Truworths. And if it does really give in at 73, you really don't want to be overweight. And at this point, if you're long, you want to reduce your long positions so that you don't have all your eggs in one basket.